going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And we hope lots of great ideas and opportunities for you throughout the show. Well, stocks, bonds, everything, they were on hold in the early part of the week, awaiting Bank of Japan and the Fed, both on Wednesday. So it was calm up until then, and then some fireworks did get started. Well, Bank of Japan, they came out with something that was kind of expected. They wanted to steepen their yield curve. They did Operation Reverse Twist, which says that they are going to be selling longer-term, longer-dated treasuries and their government bonds, and that they were going to be buying the nearer-term ones. So essentially what that does is steepen the yield curve. They want to try to help the banks so that there's a potential for them to earn more money because that yield curve got so flat there, but they've bought up all the bonds and everything over there. They thought that people might see that as tightening, and they commented that they might lower short-term rates again from their minus 0.1/10 level, but they didn't do that either. So at first there was disappointment, and then buyers did come in. The yen surged on the upside again, and that is no help for them because they want a cheaper yen so that, things look cheaper to outsiders, and they come in and buy their goods. But that's not happening because the Bank of Japan, they've lost control. And I think they've lost their minds. FOMC, talk about people that have lost their minds. They held rates. That news came out with 3 dissenters. They hinted about December. They've done this so many times. And they are plain out scared to raise interest rates. I mean, that is simple. They even said that they even want to give things more room. So the investors, they saw that as more confusion, more reason to believe that they're going to stay easy for a longer period of time. And they bought stocks, they bought bonds, they bought gold, they bought silver, they bought everything. And that lasted for a couple of days until Friday. The market pulling back a little bit. And there's just filled with contradictions, though. Contradictions about, who thinks they should raise rates and who thinks they shouldn't. And then they go ahead and they say, economic conditions are improving, and then they lower their longer-term growth expectations. So totally confused. Investors look at it that way. It seems really like they'll never tighten significantly. You probably are going to be in this incredibly slow upward path of interest rates, until there's some kind of a panic again. Stocks Wednesday, Thursday got a good boost, up about 1.5% now for the week. NASDAQ did move up to an all-time high. Bonds up 30 years, about 1.5 points, and the 10-year yield fell from about 1.70 to about 1.62. Gold had 5 pretty good days until just this afternoon on Friday when it started to pull back. It was up 5 days in a row, but now it's giving some back. It moved from about 13 up to about 13.40, or a little bit better. So at one point it was up about $35 on the week. Silver, a huge gain on Wednesday, Thursday. It was up $1 for the week at one point, even more than that. So silver got a really good move. Dollar fell as the prospects of higher interest rates waned. All of this, what am I saying? I'm saying all the stuff about the central banks, right? How do you like it? The Fed running everything, absolutely everything. The president, we're about to elect a new president, right? They're not. The presidents don't run anything. Congress, they're supposed to be in control of the purse strings, right? House of Representatives controls the money, but they don't control the money. It's 12 unelected officials out there, people that that answer to nobody, really. That's the Federal Reserve. They print the money. They print all the money they want. They control interest rates, and you can see they've controlled them in a way that they were down near zero now for about 8 years. That's incredible. They're the ones that create these big bubbles, and they're creating a bubble now. Actually, the swings that they create seem to be getting bigger and bigger, and the next downswing, you better believe, is going to be bigger. Since just in the last 65 years, they have overseen 10 recessions, and each one getting bigger. That's what we keep saying. I'm always doing this because I think the Federal Reserve they're the ones that are really the big problems in this country. Yeah, we have big problems, but the Federal Reserve, they may be the biggest problem. And I'm always talking about it. I think it's so important during this time of election. I want you to see something right now. I picked this old video out of the internet so you could see I'm not the only one that talks about the Fed this way. This is poor quality, but better believe it is a clear message. Listen to an interview, a little short, brief one here, of Milton Friedman back in 1994.
What do you think of the Federal Reserve Board today?
Well, I have long been in favor of abolishing it. I think there is no institution in the United States that has such a high public standing and such a poor record of performance.
What did Arthur Burns think of that?
He didn't like that very much. But needless to say, I didn't hesitate to say it to him. Look, the Federal Reserve Board was Federal Reserve System was established in 1914. Started operation in 1914. It presided over a doubling of prices during World War I. It produced a major collapse in 1921. It had a good period from about 1922 to about 28. Then it undertook actions which led to a recession in 1929 and 30, and it converted that recession by its actions into the Great Depression. The major villain in the Great Depression was, in my opinion, unquestionably, the Federal Reserve System. Since that time, it presided over a doubling of prices during World War II. It financed the inflation of the 1970s. On the whole, it has a very poor record. It's done far more harm than good.
So that's Milton Friedman, and yeah, we're in an election time right here, and I'm not a fan of either candidate. And to tell you the truth, what does make me a fan of one of them is that the other one will not stop this. You can figure out who that is. There's only one candidate out there that has a possibility of stopping the Fed, and if not, we're in for a chaos or a collapse that's even bigger because the Fed is the ones that's responsible. Had to show you that because I think it's incredible. I'm always talking about the problems of the Federal Reserve, and here you are, Milton Friedman. All right, so now we're going to take a look at what happened in the last week. We'll take a look at our 60-minute chart and see what happened all 24 hours of trading. You can see the gray area is the overnight trading, and the white area is the trading during the session. So what happened on Monday? Well, the markets pretty much ignored the New York bombing. Thankfully, nobody was killed in that one. They're really numb to to stuff like that right now. Crazy. They were buying this stuff overnight. Really, oil up, gold up, silver up. And that's really what led this rally. But then Apple started to give some ground finally, so the market started to move on the downside. Tuesday, stocks tried to rally again, but again, they were waiting for the Fed, the Bank of Japan, and they had a soft close in here, as you could see. There was a big drop in housing starts, and when that news came out, it seemed like it was, got the traders a little bit nervous. Then comes Wednesday, and the Bank of Japan news comes out first. And that was early, like around midnight. And look what happened in here. First, there was a big downtick because they thought there was a chance that they would actually ease rates again to like -0.3. But then after that, everybody started to buy, and because they couldn't break them. And you had that, nice rally. Nikkei was up about 2% on the day, as they didn't really do anything. And then you can see there was a first rally that broke right in here as they were waiting for the Fed. The Fed news comes out, and seemingly like the same movie we see every single time after the Fed, because it seems like they are always going to ease, you got that big upside move again. There was follow through then. On Thursday, gold, silver, steels, materials, they all got big moves on the upside as it appears that Fed ease was not going to change by any significant amount. And then on Friday, the markets did get mixed. It was interesting. Early in the morning, the Eurozone, they were pulling back. Asia pulled back. But the DAX and the FTSE got a nice rally late. And that prevented stocks from giving much ground early on. But then some sellers came in later in the day. Some news on Facebook and Yahoo. We'll talk about that when we talk about the worst of the week. And Twitter has this big upside jump. And we'll talk about that in the best of the week. So that's what happened during the trading week. And you can see, again, the central banks, they push the markets up. At least the news of it pushes the markets up. Take a look at the calendar for the week, and you can see not a lot of earnings reports coming out. Maybe the one that I trade the most that's coming out is after the close, Costco, on Thursday, and the other ones not very big traders or market movers. The economic events during the week, there's not a lot in here either that's a potential market mover. You can, this one over here, the petroleum numbers seem to be moving the markets maybe the most of anything that we see here. So you might want to take a screenshot of this and hang this up at your computer, and then you will have all of the stuff for the week. That is, I would say, my interesting opening segment for the week. And we'll be right back with the best and the worst. For the best of the week, best stock in my 320 stock universe, Caesars Entertainment. This one doesn't really have great cyclical patterns, so I would call it erratic. I'm not even going to show you the chart. They got an influx of $5 billion, really helping a troubled company. The stock pops 38%, big jump in there. Not much I can really say about that, but some resistance at like 10.5, 11. I don't think it's going to be able to get much past that, $5 billion or not. The steel stocks had a big move this week. AK Steel, US Steel, some big gainers in there. Let's look at those two charts, and you'll be able to see that what we were looking at was a potential bottom forming, but we were looking for it about 3 weeks from now. This would be an early upturn. We had it the upturn coming right in here. That's a good sign. It shows that there's a lot of anxiousness to buy the stock, to buy the group. We saw all of the metals really get a bid this week, so we believe that this is an important bottom in AK Steel. Now, this is a nice bullish pattern, really, when you see the upward stair-step movement that you see right in here. Big decline. We would still expect it to get a pretty good up move in here above the 6, maybe even to the 7 level in AK Steel. US Steel, the next one we'll look at. This one has our colored cycle phasing in there, so you can see the green zone that it's now entered into. Again, it was a little bit early. We expected it in a couple of weeks to turn upward, and now that looks like a pretty good upside turn. Now, again, this gave up a lot of room on the downside. Analysts hate this stock. Some even talking about it getting into single digits. So we think it's going to get a rally into this 22 to 23 area where those resistances are, and then really have a hard time getting much past that. But that's still not a bad gain. ATI, that's Allegheny, up 11%. Schnitzer Steel up 9%. And the DBB, which is essentially the base metals, up about 2.5%. And that is really what's driving the group with a nice gain for the week. Twitter had, well, a monstrous 22% gain for the week. That's, well, we can't really tell because you were, recording this in the middle of the day, but on a CNBC report that there were suitors out there actually interested in the company. Somebody had some expression of interest in there, but they also say that nothing is really imminent. I want to look at that Twitter chart because we actually had the Twitter chart getting ready to move to the upside in there, and this is just a beautiful thing when you look at it. We'll take a little closer look right in here at Twitter. Look at this move. I mean, you could see the cyclicality in here, and when this big down red bar right there came, we were really saying, well, we didn't think that was the beginning of any big decline, and now look what it does. It gets right up to the top of that resistance zone, making a high close to 23 today and trading up 19% right now on the day. So beautiful week in there that you could see. Perfect time for it to upturn. If it turns out that nothing happens in here and it kind of pulls back, I think it's a screaming buy, and I think that because this is the first week up in this rising phase, I think it's got more to go. So Twitter, a beautiful up move in there. Federal Express gets a nice size up move also. FDX, I got to tell you, this one up 9% on the week. They beat on earnings. We actually thought it rolled over, but made us wrong, and this ended up to be a bull flag right in here that you can see. We thought it was rolling over, would come down like this, and then get an up period after that, but then this big bar on the good earnings report. This was a bad one for us this year. We've had fantastic stock performance for the stocks that we picked at the beginning of the year. Not this one, though. This was on my list of riskiest for 2016, and it was far from that because, well, it's got a giant gain in there for the year. So bad call by us on this one, and we didn't see this coming at all this week either. So sometimes we miss them. We thought it was rolling over. Next one we're going to look at in here is Red Hat, RHT. That one beat on earnings. Analysts have upgraded that. It's got a lot of resistance up here in the 82, 83 area. And this pattern in here is suggestive of the fact that it's likely to... Look at the smaller pattern right in here. You see that right there? You can see this right in here also. And so that's this here and this and then down. So that's this here and this and then down. That's kind of what we're looking for in there. So we think, try to get to new highs, but then likely roll over and not be able to hold it. But big gain on the week, 8%. And analysts do love this one right now, Red Hat. The last one we're going to look at in here for the best of the week is Adobe. ADBE, they beat on earnings, but analysts are questioning the valuation. We're going to question the valuation on this also. Remember, we're looking at weekly patterns in here, and look at how it tried to get under this 34-week moving average and has had a trouble staying under there, but it keeps getting back down to it, right? When does it get down back to it? Well, you see each of these declining phases right there, and how about this one right in here? If you project this 34-week moving average up, let's say like this, that means pulling back to 89, 88. Adobe PE trading at about a 34. This is a high valuation for this stock, and I would say that you can if you look at the analysis that we just talked about in here, it's likely to touch the 34-week moving average sometime in, well, we'll call it late November, beginning December. So we expect this to roll over and move to the downside. But as far as cyclicality, the quality of the cycles in there, Adobe, we call it a powerhouse. Really great to analyze based on the methods that we use. And we're going to look for a top in here in Adobe soon and then rolling over. That's the best of the week. I'll be right back with the worst. For the worst of the week, well, was not much that went down very big this week at all. Of course, it was a decent up week for the market. We have Win as the biggest loser, down about 7% on the week. CLSA analyst downgraded it. They see that they believe there'll be near-term weakness in the Macau area, though they were better. They thought it'd be better longer term. And that's contrary to what we have seen going on recently. We got some good numbers out of Macau and out of Las Vegas. So Win had a big upside move, and now it's kind of pulling back. We expected that. Let me show you this chart, and you will see that we're just looking for a week or two of pullback and then up again based on these cyclical rhythms in here. So what are we looking at in here? Well, you can see these bigger patterns right across here, and then we see the smaller ones in the middle. So see this declining period right in here. That's like this one right in here. You see that? So it got kind of this downward move right there and then back up again. That's really what we're looking for in here. It's actually already gotten to some support in there. Even though it had a bad week, it's giving some better signs. You can see on here on this short-term chart on the daily how it's gotten into this minor support area and now is rejecting that. In other words, it came back up. We think there's a potential in here for another couple of weeks of fooling around in here, but overall, we don't think that there's a lot of downside in Win. Las Vegas Sands has got a pattern that looks like it could pull back again a little bit more also, but overall, we think these stocks in these support areas are more likely to start to move up again. So we'll look for a little bit more pullback in here over a couple of weeks. If you want the short side, I think LVS is better. It was down about 2% on the week, so not too bad. CarMax, the next one we're going to look at in here, and we'll look at the weekly chart. This one, there were some negative analyst comments. You can see in here how it's turned down, and we believe it's in a negative phase. To be in a really negative phase, it would have to break under an important zone like this. So it's more of a corrective phase, and that goes all the way out here towards the end of November. So analysts downgrade the stock. I don't really like it either. I think it's going to continue finding some downward movement in there. So it's down about 5% on the week. ANF down only about 3% on the week, and analysts hate this one, and so do we. This is a very negative pattern. So if we look at the way these smaller patterns shape up, note the big pattern right in here. That's this one right in here, made up of the two parts that you can see right in here. I'm teaching you cycles right now. And then you see the bigger one right in here. and then the bigger one right in here. Look, it turned down already. So if you look at the smaller ones, that's the, we'll call it the minor cycle and the dominant cycle. The minor one about to bottom. You probably get some kind of a rally. It's a bounce in a big declining trend. That would be a short sale, and we think down again, and that takes you down into towards the end of November also. So this is a bad pattern, as you can see, and we expect to see some pretty good downside in there still. Let's get the rally so we can get some short sales off. Other stocks to mention: Skechers, a stock that we hated in the 40s. It's now at $22. That one, analysts have downgraded it now. Where were they before, right? So that stock, we think, still not in good shape. We think it'll continue to churn its way on the downside. Salesforce CRM down a couple of percent on the week. This is one of the rumored stocks. With Twitter now getting this supposed expression of interest. They mentioned CRM, they mentioned Google as potential suitors for Twitter, and CRM moved to the downside. Let's take a look here at this CRM chart because I think it's interesting. So CRM, Salesforce.com. We're looking at the weekly chart. And look at a breakdown. Now, this breakdown actually occurred about 3 weeks ago. Why is it a breakdown? Well, it gets down under this cycle low right there, and then gets underneath the 34-week moving average, and it has, well, way out here into November. So if it turns out they're not buying Twitter and the news comes out and it gets a bounce, I think it's a screaming sale. So we call this quite a negative stock. Also worth noting is Facebook, FB. This is a stock that we have our subscribers short in because we believe a top is forming. You can see all the cycle work and all the notes that we do in there because this is in our focus group that we call it, in our rankings and setups list. So we have about 50 stocks in that category. And you could see over here it gave you that topping shooting star right there. And then it tried to rally, and it's failing again. This is a period of risk out over here that also goes out to December. So you see how many stocks that we have that have risk out to November, December. What do you think that says about the market? Probably try to rally and then fail out into that period. So support zone in here is right around $20. We think it's headed to $20. This is another one of those stocks that you can see on each of the corrective phases. It gets down to the 34-week moving average. You can see that there. 34-week moving average moving up into that support zone right over here. So that gets you to that $20 number that we're talking about in Facebook. The news in Facebook is that they overstated their video ad views. They're apologizing for the miscalculation, but I have a feeling that investors may be angry about it. Look at the gap here now. You can see this evening star, big double star evening star, and now the downside gap, or bearish kicker pattern as we'll call it. And this 89-day moving average coming up to the support zone around $22. So 122. So 122 or 120. I mean, those are basically the targets that we have in there in Facebook. And that stock looking like it is in a downtrend to us. And we're going to stay short that one right now unless it tells us anything different. Yahoo in the news also. You can see it rolling over in here as it's giving you a dark cloud cover this week. Here's your cyclical patterns in here. Makes a lower low. Beautiful high tight triangle correction during this period, rallies and rolls over and looks like it declines into October. Nothing much in the news there except for the fact that 500 million of their users got hacked. A lot of information back in 2014. We're just finding out about it now. So I would say investors might be concerned about that one too. So we're going to look for some pullback in Yahoo also. That is the worst of the week, and we'll be right back with our short-term view. All right, short-term view of the coming week. Coming in just a moment. Just want to remind you that we're in our final 3 days for the special that we've been running for level 3. What do you get in level 3? Well, you get our rankings and trade setups on the 81 best traded symbols that there are out there, especially for option trading also. Also, you will get our level 2 8 categories of videos, more than 250 videos in our library right now. I don't know where you could do more learning, and it's such an unbelievably great deal. And we are testing. We're going to be beginning to test next week a new ranking, and that's we call it option bias, which we take pretty involved studies and look at a combination of time frames and get what we think is the bias, the trend for option traders. So that's really important, of course, for strategic option traders. So you're going to see some changes, and we've been really improving that as we go. So that's askSlim level 3, and you can have that for half price for a month. All you have to do is send me an email, slim@askSlim.com. Ask me for that. I'll send you a link, and then you'll be able to sign up through the early part of this week. So make sure that you send me your request for that. All right, short-term view of the coming week. Always take an accounting of how we did in the last week. We've been running pretty much the 65 to 90%, which has been pretty incredible over these last months. We're going to give ourselves about 65 or 70% this week. We were kind of half right in the gold market. We thought there'd be an upward attempt. It slightly moved out of the range that we expected. It got up about maybe $15 above it, and we thought it would pull back late in the week, and it's actually starting to roll over right now. So we probably could have given ourselves full credit on that one, but we won't. And we're on the S&P 500. Well, we thought we'd get this rally, but we thought it would get only up to as high as 2161. It actually did better than that, so we're only going to get about half credit on that one. So mostly we did pretty good. Light crude, the euro currency, the bond market. Overall, we did pretty good in there. In fact, we'll say the bond market, we nailed it. We almost got the perfect numbers that we thought it would rally up to. So let's take a look here as we look at the light crude market starting out, and here is /CL. So we're looking at a 2-year chart, daily chart that we have brought in a little bit tighter in here to about 7 or 8 months. And what we're looking at here, when you see these lines in here, we have the intermediate cycle in there, just so that we can have our subscribers that get our charts see how we've transposed over the longer term trends into the shorter term trends. So what we've had is this kind of uptrend that we've been in here, but it has been on the shallow side, and that's made up of rally and sell-off. You could see that right there, and that's this cycle right here. The rally and the sell-off, that's this cycle right in here, and the rally right there, which we did expect. So we thought it would be an up week. We thought it would test 45.25 to 45.90 in that resistance. Let's take a closer look here. You can see it got just above that and rejected both times it tried to get up there, and is now pulling back. Now, there's some background news in here, of course. We've got this meeting of the producers, of oil producers, that's likely to bring you nothing. And the Fed comes out, of course, Fed again, and they want to limit banks' ability to trade this stuff. So they're putting more regulations on them, and specifically oil market is in that category. And so we get a pullback, and you can see it's pulled back to the minor support right now. So we actually think that this coming week is going to be a down week, even though you have that down bar. The way these patterns have worked out, they've basically been 7 to 9 days. That would take you, 3 or 4 or 5 more days of this declining trend you see right in here. We think the odds are high it's going to break this minor 78.6. And if it breaks this uptrend and gets under this level right under here, under 43, that's trouble. That's big trouble. So we're going to see how that shapes up, but we're going to call it a down week and threatening this uptrend in there. Unless there's something crazy that comes out from the producers, which I doubt. That's a look at what we think will be some pressure on the light crude market. So the gold market /GC, which got a rally on the Fed, You can see in here that these are such busy charts. If you're not really familiar with what we do, it's kind of hard to keep your eye on what's in there. So I try to help you. See the big pattern right here? We'll call this the dominant pattern in the gold market, and it's made up of the smaller pieces that you see right in here. These are the more minor cycles. Well, this one right in here to this nested low period where silver and GDX was to make a bottom. Well, GDX made its bottom already, and it looks to us like there's going to be some kind of a minor pullback in here. So what we have drawn as our notes on our sheet in here over here that I'm reading off of is this kind of a pattern, a down up pattern. So we're going to look for the support here. You see this minor 78.6%. You see the 89-day moving average coming in there. That's kind of our target on the downside, right in that zone. We're going to call it right around, let's say, 13.18 and then up. That would be real nice. We get a little buying opportunity if we get that. So 13.18 is kind of our target, and then up again. It might not be much change on the week, because if we get that kind of a pattern, you can see we probably just get back to around where we started. So still, we still think this range is going to be somewhat tight in here that you can see. We don't think it's ready for any kind of a breakout yet. So that's getting closer, but I think this pattern of this kind of a big pennant that's being formed is still incomplete, and we think there's a little more time in there. So we're going to look for this continued kind of tight range trading, and we'll look for that 78.6% or where that high was, right around the 1347 to about 1352 is the kind of high area that we think is that'll it'll get stuck in. So, and kind of dancing around in there, test that low. So that is the look for gold. Next thing we'll look at is the euro currency /6E, and get a closer look in here. So we thought it would get up and test the 112.50 to 112.80 and fail. Now you can see right over here, that high right over there, 112.89. So it was pretty much a great call. You could see it got up there and failed, and still stuck in this range that you can see right over here. That range is 111.70 to 113. We still think the dollar has got a lot of risk, could thrash lower. If there's any risk in here of breaking out of the range, we think it's on the upside. But this pattern right in here really suggests about a week or week and a half of kind of giving some back and then breaking out on the upside. So that's kind of what we're looking for in here, is that kind of a pattern. We're going to call this really stuck in that tight range, 111.70, 113. We'd like to be able to make bolder calls, honestly, but it's just not there right now. So we'll make the bold calls when they are there. Next one we're going to look at is the bond market. So what we said in the bond market last week was that, well, we thought it would be a minor up week, and that there would probably not be a lot of follow through. Our targets on the ZN was 130.30. Let's get a little closer look in here so you could see. And the high is 131.01. So we thought it would be, a minor up week, and that's pretty much what we got. We thought that the 30-year would get up to about 167.30, and right now it's 167.26, trading near its high of the week. Also, I think it got to 31 or something like that. So we pretty much nailed this one. We really thought that this uptrend was going to take it up in a rally, and now what we're looking for is, it's kind of this resistance, this minor resistance area right over here. We think it's going to hold it still, and that we're going to get some choppy trade as it kind of corrects that move. No, we don't see any breakout in here right now. we're going to call in the ZNs 131.06. That's this resistance right there. We don't think it can make it through it by much. And 130.14 is the downside support right over here that you could see. That is really a tight range that we're looking at in here. And you could see last week was in that tight range, and we think it's still going to be in it right now. And not a lot of ability to break out of that in either direction. The same, the range that we're looking for in the ZBs, if you're a 30-year trader, is a high of about 168.20 and a low of about 166.12. So that's a look at the bond market. So let's talk about the stock market right now. So we had been looking at the stock market as being in a time of high risk. We thought, based on the election and the historical patterns in election years, that we were going to get a decline of at least 5%, maybe even 10% before the election or around the election. That might have been a bold call. We actually had a decline in the S&P 500 of 3.6%. So that certainly didn't satisfy it, and we don't have to get that kind of a break. We think that there is we said last week we thought the NASDAQ was going to edge to a new high, and it actually did that. We think we're in a false rally in here, one more rally that is potentially going to fail and then bring us some hard selling after that. That rally might have a little bit more legs in it. I want to show you something right now before I show you these charts, what happened in here. And our proprietary indicator, the askSlim market condition indicator, looking at all four indexes. Now, I'll explain to you how this works when I look at them and show you why we thought the NASDAQ was the strongest index. And there's also something about this indicator that is suggestive of the fact that it probably has telling us that the stock market's got a little more room on the upside. Let's take a look at that. This is the askSlim MCI, Market Condition Indicator. It's a proprietary indicator, and people that subscribe to our charts are able to get this indicator. So the way it works is that when it's up here near the top, up here near the 100 level, the momentum, in other words, the forces on multiple time frames, are positive. When you get a correction and it breaks down into what we call the swing zone between plus 25 and minus 25, and then moves back out of the swing zone, it tells you it was a temporary correction. And you can see that that happened here in the Russell and then moved out. And in the NASDAQ, it just came down and touched the swing zone and moved out and moving up into the 90s again. The NASDAQ was clearly the strongest index that we had based on that, and you can see that really worked, and that the Dow Jones Industrial Average was the weakest index. It came into the swing zone and has not yet moved out. So what it tells us several things. First of all, that the decline that we had was just a minor correction because the swing zone held and these indexes moved back out of it. It also tells us the NASDAQ is absolutely the strongest index in there, followed by the Russell is the next strongest index. So I wanted you to see that and how it works. This indicator essentially was telling us when it came in and came out of that swing zone that the correction was only a minor correction. Now, the MCI works on all symbols. So if you have any questions about that, you can write me and I'll give you more information on the market condition indicator. So that told us that this was a correction that was not the correction. And when we saw the NASDAQ moving up and likely to move a new high, well, we were a little bit skeptical about that. So now let's take a look in here as we look at the S&P 500. Excuse me, at the patterns that we're looking at in here right now. So we were using kind of the Russell as our guide, and this bigger pattern's right in here. And we weren't really sure whether this pattern in here was going to resolve itself into a bigger decline like we thought right over here. Now, that was our best guess, and why we believed that after this little rally it was going to roll over and that we were going to get some bigger decline. Now we get up to the minor 78.6%, and moving out of the swing zone on the MCI tells us that there is more energy in this, enough to defeat this right now. And that is likely to give us, well, after some minor pullback, some higher prices first before this takes over on the downside and this takes over on the downside. So this goes into the election time or just before election, and that's how we have it drawn now, where there is a lot more risk after higher prices, a little higher prices. So what we're looking for now, if you look at these smaller patterns, and that's really when we're not sure about the bigger pattern, we go to the smaller patterns. And you can look at these right in here because these are really going to be strong guides for us. They've been great. And you can see that right in here as it follows these patterns right there. And now this one goes up for all of these days. It only has another day or two there and then likely to move up again before it rolls over. Yes, that tells us that we believe that we're going to have maybe one more day, we're going to say Monday or Tuesday, that it corrects and then starts moving on the upside again. So I just zoomed in a lot. This area right here, 2157, is about the lowest we see it. It doesn't even have to get down that far before it starts to move up again. Then we think that sometime by mid-late week, the S&P 500 will make 2182 to 2188 up this way, this resistance, that last high over there, before it starts to roll over again. So essentially what we're looking for is a minor down and then somewhat better up week before it gets into the next resistance level and then starts to roll over for some bigger declines into the election. So what we really think is that this week that we had that went further through the levels that we thought 2161 would be the high. It got up to about 2180. We think that speaks to us and tells us that the upward forces are stronger, and that's why we think we're going to have just a minor dip right in here in the next few days, and maybe just Monday or Tuesday, and then the market moving up again. But we don't think it's got a lot to go after that, and that there would be some good downside risk after that period. As far as the VIX goes, we're going to call next week because we don't see a lot of movement in here. Pretty much stuck in the 1170 to about 1250 range. But then the following week is when the risk of much higher implied volatilities comes back. That's it, our short-term view. Man, talked about a lot today. Really hope you enjoyed what we brought here, that you find a lot of value in what we bring every single week. And always want you to send us emails if you've got comments or questions. Don't forget, just a few more days to get our half-price deal on level 3. I think it'll really be worth it for you to explore that, and especially since we're putting on this new ranking that we call option bias ranking. So if you're an option trader or a strategic option trader, I think you're going to find it extremely valuable and certainly very interesting. I hope you have a great weekend, a safe weekend, because there's no doubt it is crazy out there. And we're always wishing you great trading.